Thank you. You're watching to a new episode of the Market Reporters, and today we talk a lot about sectors. And today we are going to talk about a controversial sector. We don't have any opinion about it yet. Maybe we do have it, but that's not why we make this episode. Because we want to highlight all the sectors that are existing in investment country. But today we want to talk about a sector that we all know it's not good for you.
Exactly.
And it's an important sector. It's a big sector because we are talking about, we're going to highlight the biggest three companies in this sector. The first two are part of the S&P 500, so they're part of the biggest 500 companies in the US. And the last one is a British company. It's part of the FTSE 200. So it's one of the 100 large companies. So it's also, if you are holding an ETF or a mutual fund that follows the S&P 500, FTSE 200, you have an exposure already in that sector. There's also, what I want to say is that if you don't believe in the sector from a health perspective, or from another perspective, you can also go short in it. You can also go short in it if you think that this sector will decline in the coming years. So I wanted to highlight that. So you know up front that we are not promoting the sector. We are only talking about the sector, and you can even
Ignore it.
ignore it, and bet on it that it goes down. That is also a possibility. Now, which sector are we talking about? We are talking about the tobacco sector. Now, you all say, okay, indeed, it's a controversial sector. But it's a large sector. If you look at the three big companies, especially the second one we're going to talk about, it was for years, for decades, the best performer in the S&P 500 if you calculate the reinvested dividend that they pay out, because they are dividend companies. That's also shareholders, because they're large, so they still have a lot of shareholders. A lot of shareholders hold those funds for the high dividend rate. So now I think the longest introduction we ever had.
Yeah, but it's worth to talk about it. If, as we said, I have the figures here from 1968 to 2017. The cigarette maker annual average return was 20% per year. From 1968 to 2017, imagine that. It's 50 years long, 20% on an average yearly basis. Who does not like an investment like that? Isn't it? Yeah, but that's what you like. Depending the name, but this is what you like as an investor. 20% per year, including a dividend. Wow. Nice.
Yeah, but again, you can also have all kind of arguments not to invest in a certain sector.
I know.
Okay, we will start with the one of the two American stocks, Altria Group. I hope I pronounce it in the right way.
You say it very nicely.
No, thank you, because normally you always say I don't do it. And it's a relatively unknown company in Europe. It's a spin-off of Philip Morris, where you're going to talk about after this one. A spin-off in 2008. And what they do, they still own the Philip Morris USA company, so they only sell, almost all the income is generated in the US. And overall, this sector is facing headwind, because due to two things, people are smoke less nowadays, and it's also, of course, due to all the law regulations, and that people smoke less, but also it's difficult for those companies because they are dealing with more and more rules regulation. You're going to say something about that. Altria Group, spin-off 2008, and what you also see in this sector, they are not, how do you say it? They are not stupid, because they realize that their sector is declining, so they're looking for alternatives. And you see that those big three companies, they do it all in a different strategy. Altria Group, they focus more on buying stakes in large other companies.
Correct.
Is that successful? Not at all.
No.
They took a stake and they paid 12.8 billion for it, and it's called Juul. And what do they make? They make the electric flavored cartridges. After that became popular, also the rule and regulation became more stricter for those products, and they are even so strict they hardly can't be sold in the US in that way anymore. So they had to write off 2.8 billion. I think it almost went down to 1 billion. So they made a miscalculation in it. What they also did, they took a stake of 1.8 billion in Kronos Group. That's also a listed company, and they deal in cannabis. Of course, all in the same. They're not making stakes in Bitcoin companies, so it's all in their line of, of business. And you can maybe we can put it in the screen the chart of Kronos, and that's going down. I think they have to write off also like 90%.
Yeah,
on
because that
stuff.
whole sector, the whole idea behind medicinal cannabis is a flop at this moment because it's not allowed in the US.
Yeah.
Only if you have as a company a license in Canada, then you're able to do something with it.
But this is the Canadian stock.
Yeah, but they might not have the license
To sell it in the US.
I think so. Yeah.
Yeah. So they're not good in the changing the strategy. They still make a lot of profit. I think it's for all the companies, and they also pay out a lot of dividends. So based on the expectation of 2024, it's expected that they pay out 10% dividend.
Yeah.
And that's a lot.
That's a lot. When we look at Philip Morris was of course the mother company initially of Altria. They split it off. They focus on the worldwide brands they own, for instance, also Marlboro. And they're doing much more an in-house strategy. So they're developing the products in-house, not as much as Altria, who's buying or taking stakes in other companies. They focus on developing new products in-house. Looking at the cigarette volume, of course, as all the other companies, it's going down dramatically. But on the other hand, they have been able to generate an increase in their heated tobacco units, which is the little machines that still has real tobacco inside. There was a rise of 24.8% of the sales in 2021. So that I think is for them a lot of potential shown there at that moment. First quarter of the 2022, another increase of almost 17%. So they are managing to shift away from cigarettes to these heated tobacco units.
And I think it's also higher profit on those products.
Yeah, I think so. Once you have it done, it's easier to enroll it. Because not so much depending also on. I mean, tobacco is, as we talked about, cacao is the same sort of product. You have an impacts of climatological that can have.
Yeah, but in this product is also tobacco in.
Yeah, but the machines itself.
If
you make that, it's not less depending on climatological circumstances. Even though they're selling much more of this HTUs, as they say it, they are still relying for the biggest chunk of their turnover from old-fashioned cigarettes. And what's funny is about what I saw also in the newspaper that the owner of Marlboro, which is in this case Philip Morris, they're planning to build a big factory in Spain. To be more specific, in the area of Barcelona, Catalonia. We're looking at Greece and Italy, but in the end, they decided to do it here in Spain. It's a 100 million investment. Will generate, of course, quite some jobs, and in that factory, they will mainly focusing on these little devices that I just mentioned. Looking at British American Tobacco, also became a huge player in the market, and it was mainly due to a takeover that took place in 2017. They were bought by Reynolds American. They were taken over for not less than 50 billion. Also a dividend powerhouse. They own the brands of, for instance, Camel, Dunhill, Newport. I don't know those brands. Camel I do know from the past. The Camel Trophy, which was also one of the biggest examples of how you could sponsor a big event that everybody knew about, but that's of course not possible anymore. They're focusing mainly on transitioning also towards new generation products. So products as the vapor, as such. They also have the brand, it's called Views, which I think is pretty known. And their sales volumes are also increasing in these machines because of course they start from scratch with about 80% on an annual basis. Both companies between 6 and the dividend percent of British American Tobacco?
10%.
Around 10%. Yeah. So Philip Morris 6% dividend, British American Tobacco 10%. Looking then from a technical perspective.
And also I think that what their main goal should be and maybe is that like with alcohol and with meat, that you have now meat products that are, it's always subjective, but they're good replacement for meat. You have alcohol-free beer, it's a good replacement for normal beer. And maybe that's their goal, so they can invent something that it's and maybe even that it's good for your health. If they can manage to succeed in that,
If you just smoke water with vitamins in it,
Yeah.
and it tastes like apple.
Yeah.
Why not?
yeah, if they can succeed and the taste, because taste you can replace, of
Yeah.
course, with all kind of
Chemicals.
artificial products that are not bad for you. So if that's the underlying goal, we didn't see it, and they succeed in it, then they have can have a jump, no?
Absolutely. Because of course, in one of the biggest things, we're all talking about AI, but what is the main driver for these things is the social thing around it. Also, I think smoking, you do it depending on what, but it's one of those things, one of those habits that it's just like go and grab a beer. Yeah, you light a cigarette because you're having a good time. It's part of that whole social thing, you know. Looking at technical charts, you see actually that Philip Morris and Altria are sort of like performing on the same levels. The winner in this case is Philip Morris. They perform slightly better, but
And it's maybe because their strategy works out, their alternative strategy works out better.
Yeah, it could be. And if you look at British American Tobacco, they're still really far behind. It's almost a 50% difference in development of the prices. So, yeah, in that sense, from a technical perspective, you would like to have a look at why British American Tobacco is where it is compared to its competitors.
Yeah, so to round off, a difficult sector. We don't have an opinion. It's a large sector. You can go long in it, you can go short in it, and you can do nothing with it. We wanted to highlight it because it's also something that people don't talk about anymore. No. So we just want to highlight informative to show you how this sector works.
Because it's still considered a consumer product, you know that.
Yeah,
like consumer staple product, like something like consumer staple
product.
And
then you have indices for that and ETFs, and they're all in those.
They're all these companies, absolutely, yeah.
Thank you for watching. Give us your thumb.